Greetings, ladies and gentlemen. This is Houston Trong from thetradingedge.org, and here is your weekly market outlook for January the 6th, the 10th, 2020. And first and foremost, let us first say Happy New Year. Hope you had a good first trading week of the year. It was a light trading week as we had some holiday days mixed in there, but we did get that first trading week done, and there was some good volatility to begin the year. So let's talk about the coming week in a few moments, and then we'll recap the past week, because I did leave some clues. So we'll go over those and we'll examine some of those tea leaves and see where that leaves us for the coming week of Jan 6th. So before we get to econ news, right now the market's being driven by, you guessed it, geopolitical risk. So the market was continuing to do its January effect thing. I wrote about that on the blog last week, a small article referencing the effect. And the effect may still be in effect, so to speak. So would not be surprised whatsoever to see the markets once again climb higher. But for the time being, geopolitical risk is in the news. So that will be the headline risk out there, because there isn't a lot of econ news, frankly, on the calendar. So this coming week, we have the oil report on Wednesday at 10:30. You know, it's interesting only because oil has been rocking, so that may give more juice to the rally. Jobless claims on the 9th, and of course the unemployment number on the 10th, which is Friday in the morning, so watch out for that. Earnings, nothing too much on top so far to watch and wait for, so nothing new there. So that out of the way, let's jump into the charts now, and let's try to examine those tea leaves, like I said before, and see where we pick up on this coming Monday. So as we do, we always start off with the VIX, because we spend a little more time here with the VIX and the SPY, and the rest of the indices usually look the same. So, being at the high level right now, for the first time in a while, we've got a green month on the VIX. So remember, we have 1, 2, 3, 4 months prior to that, we had nothing but red months. So right now, the VIX starts 2020 off green, up only 1% right now. So not a big, green month by any means. This could quickly evaporate. So on the weekly chart, what do we have so far? Well, we got ourselves an outside week, ladies and gentlemen. So that's significant, not because it's a portending, it doesn't portend any outcome, just because we want to see what the next bar is, right? Is it going to be a momentum move to the upside or downside, or do we get an inside bar? And this looks the same on many of the other indices. So outside bar on the VIX now, we want to see which side of the range it breaks out on. Now, on the daily chart, it looks as follows. So, if you recall in last week's video, I mentioned that we had that unfilled gap right there at 1553, and I said it's very, very likely that we take that out in the coming, in a very near term. We did that on Monday. So on Monday, we got that gap filled on the 30th of December. Then we have our New Year's Eve trading, right? So we have that outside day on the to the downside on New Year's Eve, and that's obviously was a good thing for equities. Equities shot up big on New Year's Eve, and then we had that bit of geopolitical risk pop up on Friday's session. So look what we have here. So this is what I talked about, right? So here we have a sell signal. So recall what I talked about in the prior week's video, that we had a buy signal here on the VIX and a short on the SPY and the rest of the indices. This was a reversal signal right there. If you forget what it was, I'll refer you to last week's video. Then we had a reversal signal here on the Tuesday session. Why was that? Well, you gapped up and you came back into the range. Once that happened, it turned to a reversal signal, and we had that full reversal that went back through the entire range, going out the other side. Okay, so now the gap down on Thursday, and now on Friday we gapped up. So we need to draw a gap spec in here. Now we have a gap unfilled down here, and I expect this gap to get taken out eventually, because all gaps on the VIX, VXX, will eventually get filled to the downside. Maybe not the upside gaps, but I'm saying the downside gaps always get filled, because VIX, the VXX contract, is built to go to zero. This thing will eventually reverse split, and because it has the decay in it. So this will eventually get gap filled, so that will be a significant area. We want to watch for that, the 1451 area. Okay, so we got the reversal signal here, and then it went outside bar and down. Once it popped up over there, now they're gunning after that pivot high there. But notice how the buyers stepped in. So the buyers of indices, the sellers on the VIX, stepped in on Friday, even with that geopolitical risk. So they bought it back right away. So even after all the scares in Iran and the possibility of an increase in escalation in the conflict there, buyers of the indices did buy it back, and the VIX only ended the day up plus 5.3%. It was up a lot higher earlier on in the session. Okay, so now what you want to be looking for as we go into Monday is the shorter time frame chart here. Here's what we had, right? So going in, here's your Tuesday, right? So here's your New Year's Eve session. I'll just zoom in on that. Is momentum. Okay, so here you go. As I mentioned before, you had the reversal signal right here. See how it gapped up there? It gapped up on New Year's Eve, and then as soon as it comes back on the range, there's your reversal. Because anytime you go back into the range like this, and this goes inside up, this has a possibility of turning to an outside bar, and that's what happened. It turns into an outside bar, and then it goes momentum to the downside, right? Outside bar, down, down, down. Momentum gets cut right here. So when it gaps up, immediately the momentum, that downside move has been extinguished. Now a new momentum move has to be set up again, but this immediate momentum move was canceled on that geopolitical news that came out on Thursday evening into the Friday session. Okay, so on the final 4 hours of the trading day, well, 3 hours technically, this is the 1:30 bar to 4 o'clock, we get left with an inside bar. So just like we said on the weekly chart, we want to see now which way this thing breaks. Okay, does it break to the downside or to the upside? And that will tell us who is in control on Monday going into the new week. All right, so there's your VIX chart. Now let's go to SPY. Mirror opposite. On the bigger time frame though, here, monthly chart, this momentum move, this outside bar up, I call it momentum up move, is still in effect, right? It's going to take the break of December's low in order for this momentum to get wiped out. That's significant. You'll see why that is, with a few other charts later on, but momentum can last for a long time, like we said in last week's video. Refer to last week's video when I showed some earlier examples, how far momentum can take you, and simply allowing price to lead and then being responsive to price. So outside bar up on the monthly. On the week, just like the VIX, outside bar and a doji week. So this doesn't tell you much right now, right? It just tells you that the buyers and sellers got aggressive on both sides, and this allowed them to take up both sides of their prior week's range. Now you really want to see the next bar. I'm leaning towards a continuation of the bullish action we've had so far. That longer term momentum we see on the monthly chart, and if you look at the daily chart, you can just see it here as well. The 8-period moving average, right, was quickly violated. Well, was briefly violated back on the beginning of December, right? We broke below there. We only had one session here where it closed below. Then we had a second session that they immediately bought it back, and then within this 2 days, then it closed back above 8, and then it was gone. All right, for the rest of December, it was trading well above the 8 period. And look what happened here. So here, right, here's our New Year's Eve. On the Monday, it tapped the 8 period. On New Year's Eve, the 31st, it opened below the 8 period, and once again they bought it back right away, closed above the 8 period. Look again on Friday, they opened below the 8 and then immediately bought it back and closed above the 8. So here's the gap that I talked about that was going to get filled eventually, and it got filled pretty quickly. That was on Monday session, right? There's your Monday, opens here, boom, gap down. This is the reversal signal we talked about last week, right? So Friday had the reversal signal, they sell it, right? They close the gap here, and this gap, there's a gap here at 320.73 right there. Okay, so I'll just show you right there. I'll draw it in. So that gap got filled, and then that gap got filled right down here, right? Got the reversal signal right here. Okay, so I'll show it to you on the 4 hour, but I talked about it on VIX already. As soon as this thing gaps down and comes back at the range, there's a buy signal, and it pops back up. Now you have an unfilled gap here. Okay, so there's your unfilled gap, and now you want to wait and see, can the buyers break above this prior bar's high, right? Friday's high. If it does, they're immediately going to go after that gap there. That's going to be in play right away. Okay, if they do break it above Friday's high, this will be very, very bullish, because once again, you'll be back above this here. That blue, it kind of looks dark blue. It's actually a combination of a blue line and a purple line. That is the quarterly open, the monthly open, and the yearly open, right? So that is going to be full time frame alignment if we can break above that purple, dark purple line. Okay. So if you take a look now on the 4-hour, there it is. So here is a reversal signal that I talked about to the downside. Right there, goes inside bar, breaks down, gaps down here. Okay, they buy it back. Right there, pops back up. Okay, so now right here, inside bar. Now you want to wait and see which way it breaks, because if it breaks to the upside, remember there's that purple line. We're full time frame alignment to the upside again, and there's your unfilled gap right there. Okay, so that's what we want to be watching for, excuse me, on Monday. Now on to Qs. Okay, on the Qs chart, same pattern as the SPY. Outside and up, up, and up. Okay, this is actually a nice one even because it went inside outside. All right, so we had a really tight consolidation period in September, excuse me. It broke to the downside first in October, then they bought it right back, trapping all the shorts, and then they go outside, inside, up to launch it into highs. Now on the Qs, we have a green week, but it's an outside bar. It's an outside bar right there. Okay, so just like the Qs, the SPY, we had that reversal signal right there on Tuesday. So there's your Monday, there's your Tuesday, same reversal signal, and it goes inside bar up on Thursday, and they forced the shorts. So anyone who got short in this sequence, right? So remember, the reversal signal was on Friday, last Friday. I talked about it. If you did not cover down here, look what happened. Okay, so if you do not cover down here, it gaps against you. And remember, Thursday, if you're trading that day, it was very bullish. Look, it was up 1.67%, and you know the bears were getting squeezed. So if you're short here, you were really getting short squeezed. Just to give you the picture on the 4-hour chart, it looks like that, right? So here, inside bar and down. So this is your Monday. Here's your Tuesday. As soon as it comes back in this range here, as I talked about, there's your reversal. That is your reversal that can potentially create an outside bar. It required 2 bars to do it. Look, this bar here is below that bar. Okay, this bar here is above that bar. So these 2 bars have put together is actually an outside bar of this bar. Okay, that's how you need to be seeing it, is that this is actually these 2 bars break outside of this power bar's high. So this is basically an inside-outside pattern on another time frame. Now, if you did not cover here, what did I say? You got squeezed, right? So this is why the shorts have to be fast, because you're trading against the trend. If you get short here, it's a nice trade, and I did get short up on the SPY in this sequence, covered when the gap filled on the SPY at 320.73. Q's the same picture though. There was a gap here, right? A close of 211.87 would have been a decent area to cover, take some profits. Here now, as soon as it goes inside bar and down, as soon as it breaks back above there, you have to get out, right? Because that's your reversal. Inside bar long, inside bar reversal long. If you did not close it off on Tuesday's afternoon session here, Thursday, right? This is New Year's Eve or New Year's Day, excuse me, the New Year's, the 2nd of January, the New Year, gaps up and squeezes you. Then you have that bit of geopolitical news come out here, gap down, they bought it back right away. Okay, so now let's move our unfilled gap, because now we have an unfilled gap here. There, closes there, and now we'll see if that gap gets filled or not. Russell, slightly different picture. So the Russell here, we did not have that outside bar momentum move to the upside, but we do have quite a bit of decent momentum. We have 1, 2, 3, 4 consecutive green months now, and an inside bar to start 2020, right on that broadening formations trend line. So you want to see how that thing resolves. Does it stay above this trend line, or do we come back in through the range? Time will tell. So in the week, this is what we look like here. The Russell is the weakest by far, because unlike the other charts, we did not have an outside bar this week. All we had this week was a bar that broke one side of the range, and that was to the downside. So we had that downside break. This coming week, you want to see, can it continue to break to the downside here? That's what you want to be watching, because this momentum move that went outside, up, up, up for 3 weeks got extinguished this past week. So that momentum that was in Russell was extinguished. Now you want to see what happens to that. So on the daily chart, what you have here is more bearish action, although they did, the buyers did step up here on Friday. So here, outside bar, down, down, down. It got extinguished there. Then there's your Thursday, quite bearish as well, because it took up both sides of the range. And on Friday, it started off bearish because it went outside bar and down, momentum to the downside. The only positive thing here for the buyers is that, as soon as it comes back up through here, there's your reversal signal. Now, can they continue to push it up? You can see here, this purple line. Look at the resistance that got offered here on Friday. So there was resistance there because that purple line, what was it? The prior week's low, right? So that prior week's low, that breakout, ended up being, or that breakdown, excuse me, and it being resistance for the Russell. So you want to be watching to see how it trades around that level now. Because if it goes outside bar down again, anyone who bought in this sequence thinking it was going to do some sort of reversal back to the upside again, if it breaks below this low, they're going to be trapped. Then they're going to have to cover, and if they don't, they're going to get squeezed on because the weekly chart is now pointing down. Okay, you're trading right now. You're trading below the yearly open, the quarterly open, and that monthly open. Okay, it's a red month, red quarter, or red year so far for Russell. So that's what you want to be watching is if it breaks below the prior week's low, right, or this low right here. All right, so I'll draw another purple line here. If it breaks below this area here, the prior week's low, then these buyers are going to have to cover, or they're going to risk getting squeezed on. Okay, so that's what we want to be watching for the Russell coming into the Monday. And so you're going to see a short-term chart tell you the answer. So here, outside, inside, on this is the Thursday, it breaks to the downside. But notice the Bollinger Band, it's actually squeezing tighter and tighter. So we're getting consolidation here. So the buyers down here, they bought it back. They bought this oversold condition, quote unquote. They pop it up. Now we have a inside and down, inside bar. If the buyers step up here, inside bar reversal, then we go right after this unfilled gap up here. Okay, we go after these guys up top here. Okay, that pivot. So we want to be waiting for. If it doesn't work, they break it down here, then we're going after that pivot low there, and we know what happens. That continues the weekly move to the downside. Now, Dow. Okay, so Dow, like we saw in the SPY and the Qs, same picture. Outside, up right now, doji month. Sitting right at that monthly, quarterly, and yearly open. Week, outside bar, very big doji. Okay, so there's your doji, indecisive. Now you want to wait and see what happens, see what side of this range it gets taken out. So this is, once again, we want to draw in those lines here. That's going to be significant to find out which side of this range it gets taken out. That's going to be significant. So, and very well, we could just get an inside week this week. We had a lot of range this past week here, and it could just be a consolidation week. And that's very, very possible as well. So on the daily chart here on the Dow, like we had the other indices, there's your reversal signal the prior Friday. There's your buyback signal, reversal to the upside. And now, look, we're still honoring this 8-period moving average, right? So you get a close below there, quickly pops back up again. Here they try to close it below the 8. Could not do it. They bought it back. Now you're sitting right there, right below the quarterly, monthly, and yearly open. Okay, so on the 4-hour chart on the Dow, well, it's basically the same. You have an inside bar on the Dow, but look at the Bollinger Bands, and they're tightening, right? So they're getting very tight, and so would not be surprising if they remain tight like this or they squeeze even further. We're going to see ourselves an inside week this next week, and that could then set up something even more explosive for the week prior or the week afterwards. Now let's talk about TSX, because TSX a little bit more more trading on the bearish front. So far of the year, they got a red year, red quarter, red month. Well, yeah, it's red, but we opened up higher, now it's lower, but only lost. We're still up 0.02%. So red so far in the month, but it's hanging on to some small gains there. So inside month so far, lots of month to go. Here, as I mentioned, we had the ability, the possibility that we're going to take out the prior week's low, and that's what finally happened this past week here when we went to the downside. On the daily chart, this is what we see here, that we have the exact same reversal signals that we saw in the other indices. Sorry, this is not the exact same reversal signals. We had the one here on Friday, right? So if you recall 2 weeks ago, I said, look at the volume here that showed up on the 20th. That was profit taking. Now the bulls kept on pushing it. Then they had an outside and up day, and this is where they really trap people, because people saw a breakout. Look, they're saying, oh, breakout, right? They bought the breakout, and these guys who bought the breakout got trapped. Outside and up, momentum move. As soon as that low gets taken out, the momentum's extinguished, and this is what happens. Boom, breakdown. Now we have lower low. Okay, so this is potentially a lower low. So this high here, a lower high, excuse me. This high here is lower than that high. Now, if we get a lower low here, it goes below there, then that will effectively be a lower high. Okay, and what's more significant right now is that you can see, just like we saw in the charts before, that purple line was the prior week's low. Okay, so this week on the TSX, you only had 2 trading days. So here you pierced the prior week's low. So right there, sorry, did not have, let's say it this way. The January only had 2 trading days, right here. So there's your second, and here's your third, and then there's your 30th and your 31st. So this week here, it broke. Well, in 2019, I'm trying to say, in 2019 we broke the prior week's low. In 2020 we haven't done it yet. So these 2 days, 2020, this is 2019. So 2020 we haven't broken below the low of 2019 yet. That was set the prior week. Let's see if we can do it this coming week or not. Okay, so that's what you want to watch out for, because on the 4-hour chart, it's telling you something is setting up. Okay, because here, inside, outside, inside. So you definitely want to be paying attention to now how this pattern on the 4-hour chart breaks. Outside, inside, inside, because that will tell you. My bias, because I trade with time frame alignment, is I'm looking for this thing to go lower, right? Because now you're trading with full time frame alignment to the downside, right? Because you're below the quarterly, the weekly, the quarterly, the monthly, and the yearly open right there, that dark purple line. If the week opens up around here somewhere and all of a sudden it goes boom like that and breaks below that low, you're going to be full time from alignment to the downside and expect some more downside. Not saying it's going to crash, but right now the bias is to the short side. That's how I'm expecting this pattern to play out, so long as it stays below that particular open, right? Yearly, quarterly, monthly. So on to another index, emerging markets. And this is one that's had some really, really good momentum, and has been a kind of a canary in the coal mine, because EEM, even though it has a lot of exposure to the Asian markets, it bottomed early. So it bottomed, back in August, early September, excuse me, and it never looked back. And so even though the tariff situation had not been resolved yet, the EEM buyers kept buying it up and bidding it up well before we had the agreements on the tariffs. So for now, outside month and up, although a red month so far, red quarter, red year so far on EEM. Okay, so red week. Now we want to watch for this, right? So we had an inside and up condition here, and then the second week up. Now hitting the top of that broad information. Okay, so hitting the top of that broad information, you can see it right there. Hit it right there, so right on the tip of it. Okay, so it doesn't get any nicer than that. The sellers step in. Again, we've drawn this broad information for weeks now, so that's been there for a long time. Hit the top of that, profit taking, and now if they break below that low, then that's going to be a sell signal. It'll be a reversal signal on the weekly chart. You can expect to see some profit taking coming back through the range even further. Okay, so EM, that's what you want to be looking for on the EM chart. Can it break out below the prior week's low? Because what do we have here on the daily chart? You can see the gap is an unfilled gap right there. Sorry, the gap is right there. It opened there. So now if it comes back into there, there's a gap fill. There's a very good chance it comes back through this bar and then breaks below this past week's low for more selling. Okay, now let's talk about TLT, because with the geopolitical risk, that thing has been picking back up again. So TLT had a really good run in summertime, right? So July goes outside bar and up, and then it gave back some, and it went inside for 2 months, and then it broke to the downside. Now this month, a good start so far, up 2.69%, inside bar so far, but a green month. On the weekly chart, inside, outside, right? So this means they got aggressive here, and now this coming week, if they go inside, outside, and up, all right, so let's redraw that, inside, outside, and up, then momentum is continuing to the upside, and you can expect them to take out that pivot right there, these pivots. Okay, so on TLT now, on the daily chart, so there's your end of 2019, so there's your Monday, Tuesday, and look what happens on Thursday. So this is things started to pick up on Thursday, even well before the geopolitical news came out. Look what happened here. It gaps up on Thursday. This is a bullish kicking pattern. So it closes at the lows here, right, on the 31st. On Thursday, look, it gaps up significantly, trapping anyone who thought this was a great short. Because if you're going into at the end of 2019, you're like, this looks like a pretty good short right now, doesn't it? It's going down, 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 right? The highs are lower high, lower high, high, right? And you're thinking this pivot here looks pretty juicy, looking pretty good. Feels pretty good to be short, right? Feels pretty comfortable until that happens, right? Because now, if anyone who got short on the short term, if you get short anywhere in here, now you're going to be underwater. And if you don't cover on Thursday, the news comes out on a Friday, you get another gap up, and now you're really caught. So this is how the market squeezes people as they go after different pivots, because traders know where are you going to put your stop in the sequence. If you're short from here or here, where are you going to put your stops, right? At these major pivots. So this pivot here, like we said on the weekly chart, that one here, that marks 140.14. If you recall on the weekly chart, that's what I said. They're going to go after that pivot there. 140, this area here, 140.14, and this one here. This one's even a better one. Right there, 141.77. This outside bar, these two outside bar highs are very likely to get tested if the momentum keeps going to the upside. Okay, so that's what you want to watch for on TLT. Let's see if they can continue to squeeze these longs or these shorts, because if you did not cover down here, you're going to be underwater very, very quickly. Okay, so there's the 141.77 level right up here. So now let's talk about GLD, another stock that's taken off. And GLD, here's the picture on the really large chart. This is what I was talking about, the outside bar up condition. This has been outside bar up now since April 2019, right? So outside bar up, even though gold pulled back at some period in Q4, we had some pullback in Q3 as well. Look, outside up, inside up. So it starts the year inside bar and up now. So potentially going right back through the range again atop this broad information right now. Now, right, this momentum does not get alleviated until a prior quarter gets taken out. This prior quarter's low never got jeopardized. Still not in jeopardy, right? Look what happened here way back in 2018 when it went inside bar up and it leaves a small bar like that. Then it gives the sellers a chance for them to take it out. And when you do this, extinguish momentum, then oftentimes it can come back through the range, which is what it did. It took out that low, and that low, taking out everyone who was long in that sequence. So I'm not saying it's going to happen right away here. That's what you want to simply be watching for to see how long the momentum condition continues. Back on the monthly chart right now, big green month so far to start the year, right? Sitting right on top of that broad information. The returns right now are up 2+%. Okay, so on the week, that shows you what you can see here is that we have a continuation of the prior week's breakout. We talked about the prior week already. We had an inside bar break to the upside, right? Inside bar up. Then we have a new week here, and immediately it goes continuation move. Okay, so on the daily chart, it looks like this. It's hard to trade on the GLD product because you do have gaps on GLD. So I'll quickly show you what that looks like on something like the gold futures contract. Even if you don't trade futures, you can do it on something like a CFD contract like XAU USD. So we know that this is the prior week's high. That purple line, that's the prior week's high, and on Monday they pierced it. Okay, so on Monday they pierced it here, and there's your chance to get in on a signal. Okay, your system has to give you a signal to get in. Once the prior week's high gets taken out, you can either try to get in to anticipate the break, or once it breaks, you need to have a method that's going to allow you to get into that trade. On GLD, it's a little harder because there's gaps, right? So it's a little trickier with gaps because you can't really wait for things to sometimes play out because you may get gapped against the next day. So I'll show you the gold futures contract as an example of a really good example where there's no gaps. So here you go. Same chart basically, right? Green month on the weekly, inside bar up, right? Continuation. That purple line marks the prior week's high. So on the daily chart, it looks like this. Okay, so here, there's your prior week's high. This is your Monday. It cracks above it on Tuesday. There's your Thursday. There's your Friday action. Now zoom in on the 4-hour chart. Is very nice here on the gold futures contract, right here, right? So here's your prior week's high, that purple line. It breaks the high there. Okay, so it breaks the high on Monday. Runs up. There's your classic pullback, and right here, there's your buying opportunity. Right? Breakout, comes back to retest the breakout, and here your system needs to give you a buying signal, which it does. right? So here's your reversal signal right there. You can also go inside, outside, up. But that's, that's pure momentum at that point, and it's off. So you buy, this inside bar break or that break here, that's a very nice trade going into 2020. Okay, so gold, lots of momentum still. Let's see how far things go. It is hitting the hitting the Bollinger Band high here on the weekly chart, so it has to keep going. Otherwise, you can expect it to pull back in a bit. Doesn't mean it's going to correct all the way, because in order for this thing to correct now, you have to basically take out that prior week's low, which is pretty far away, right? It would require quite a bit now to break things back down again, but anything's possible. So just want to wait and see if this week's low gets gets tested or not. Okay. Let's talk about digital gold. I call it Bitcoin digital gold, and that actually picked up. And I think we got ourselves a little green week here. No, actually not quite green, but looks like the buyers did step in. But we do have green months so far. So I'm still short a little bit of Bitcoin, but I have taken profits in that. We are seeing a bit of a reversal now. Whoops, I do want to bring up another Bitcoin chart here. Wrong exchange. So there we go. Green months so far. Too early to call it a reversal on the monthly chart. You do want to see this high, December's high, taken out before you call it a larger reversal. On the quarterly chart, start there, still inside quarter, trading well inside of the prior quarter's range. So what would it take for Bitcoin to break outside the quarter's range? See here, why we had this huge move to the upside back in Q2 of 2019 was because we had this situation inside quarter going into in Q1, and then Q2 is when we had that break of the quarterly move to the inside and up, right? So maybe we do the same thing here again, right? In this year we have a inside quarter, and then in Q2 we get maybe a break. That would be significant. That's what an ideal situation, because then it plays out exactly like this. Doesn't mean it's going to end up that way, but that would be an interesting pattern to watch out for. Then we'll just respond to price. For now, inside month. Weekly chart, they did buy it back. So last week they took out the prior week's high, okay, but they pulled it back in. This week they took out the prior week's low, but they brought it back in. The buyer stepped up here. So now looking like a kind of a hammer right now on the weekly chart, albeit still red. Now on BTC, this is what you want to be waiting for. So this is the pattern that needs to be we need to watch for. Right now, it's just Saturday. We still have a Sunday to go, but it's going outside, inside right now. How does this pattern resolve itself? Because you're trading a bit of mixed time frames right now, which is why you're getting this tightness, because there's your purple line, right? Your yearly, your quarterly, monthly open right there, and now you're trapped between this and that line here. That's your weekly open. All right, so it will opened up here. This is why this coming week will be important, because this is the first time where we have potentially this opportunity for things not to be in conflict. And so the markets will reconfirm again whether they stay within this, this tight range, or wherever the weekly opens up at, whether it's down here, up there. That will make things easy to trade with full time frame alignment. Because let's imagine if price opens here, right, on Monday or Sunday night for cryptos, and all of a sudden price moves upwards, you're going to be trading full time frame alignment to the upside. Likewise, if it opens there and all of a sudden price goes down there, full time frame alignment to the downside. That will make things easier. But right now you have that choppiness because you have mixed time frames. That's your Bitcoin. Okay, so let's go do a quick peek here. Yeah, so on the 2-day chart right now for Bitcoin, outside bar. So what you want to be looking for now is, which way does outside bar resolve? Does it go outside bar up, down, or inside? And that's what you want to be waiting for. So let's take a look at some wider time frame charts, as I promised in last week's video, and then we'll wrap things up with a few fast fire stars and dogs. So let's take a look at the monthly chart now. Let's take a look at some names. Here's some interesting ones for you to pull up on your own charts. So Box, setting up for something in the near term, I believe. On Box, inside, outside, inside currently. We want to be watching to see which way this one breaks, because that will be significant, because they've been doing a lot of consolidation and a lot of shucking and jiving, and it's definitely been getting people trapped on both sides of that range, and basically confusing and frustrating most people. So right now, this, once it breaks out of this range, it's going to be significant, because now you've frustrated and confused enough traders. Some traders have frankly given up, and other traders, because they're so frustrated, that once the move does come, they will chase it. So expect this thing to resolve. When it does, keep your eyes on it. TDC, this name has been in the tanker for a while, but now if it can find some strength going into Q1, right, you might get that Q1 tech effect where earnings come out in here in February, and if it can break above December's highs, outside, inside, possibly back up, taking out November's pivot. Weight Watchers. Okay, so Weight Watchers, dangerous place here, because you actually did break below the prior month's low already. So outside, inside, and down. So actually I want to change this to my orange line here. Outside, inside, and down, pop back up, but watch out, this thing could go back down and come back out this guy's range. So looking for the November's lows to get taken out here, because here in the weekly chart, there's your piercing of the monthly lows, the prior month's low. Now, if it comes back up, and all of a sudden you get a reversal again, we're definitely coming in and going after November's lows. So that's what you want to be waiting for, is for the price to come back up, maybe one up one again, and then get some sort of reversal signal for it to come back down again, take out that pivot low. Now, let's go back to the monthly chart. Another name, DBX. So here's a name that's been beaten up for a while, but maybe finally bottoming here. So Dropbox, like we saw box earlier, earnings are right in February. That's what you want to be waiting for. Can you take out very similar pattern, right? So inside, inside, outside, down. Now they bought it back though. Look at that. It hit some all-time lows. Buyers stepped in here, some volume. Now if they break above December's highs, then they're going after November's highs. Okay, so that's what it looks like on the monthly chart. So interesting pattern there on Dropbox. Here, just to confirm things even further, look at the 3-month pattern on Dropbox. Okay, so here's a quarterly chart, more macro stuff. Inside, inside, and down on the quarter. Outside bar down, and now, so there's your monthly high, right? If it goes back above there, if you then break above Q4's range, we're going back up to Q3's range, right? So that's something we would definitely want to be looking for. Dropbox could be an interesting reversal play. Another quarterly chart. Let's take a look at Square here. This has been consolidating for a while too. So here's a name that was formerly a high flyer and has now taken a bit of a break. I'm gonna delete some of these lines here for us. So now for Square, look inside quarter. Oops, excuse me. Inside quarter. So outside, inside, inside, outside, inside, right? So very, very tight stuff here. Relatively speaking, it hasn't been moving like it had in prior years. And now you want to see how can I break outside the last quarter's range. It may take a while because you're still far from either side, but once you do it, just keep your eye on Square. Once it gets closer to one side of the range or the other, then you really want to be paying attention. Zendesk. So a few more tech names here. Zendesk, outside bar and down. Okay, but they bought it back right away, and now if they can break it above that pivot high there, it gets interesting, right? Because now outside down and back up, coming back to those all-time highs, possibly for Zendesk. SFIX, another name that's been, oops, if I type it in right, another name that's been beaten up quite badly on the 3-month chart here. So outside bar down, same thing again. Back up here, you still got a lot of ways to go though. So, you're still far from taking up that prior quarter's high, but if it does, going back up here. Last one, last tech name, Workday. Okay, outside bar and down. This may take some time to play out, so it's not something we play right away, but there's that pivot high. Looking for that to get taken out, possibly back to all-time highs. And likewise, Hubs, so another cloud name, exact same pattern. So these two guys are very, very, very correlated. So definitely watching for one of them. Whatever one does, the likelihood the other one's probably going to do a very similar thing. Outside bar and down. Look, they bought it back. You break above that quarterly high, right, through this bar here, and you come back up to the range again. So that looking quite decent on Hubs. Okay, so now let's just quickly do some fast fire names here, and let's begin with the dogs. So here's some dogs. I got 5 of them for you. Cardinal Health. Wow, the past let's say 2 months have not been kind to Cardinal Health. We had some all-time highs, or very close to all-time highs, yearly highs, not quite, monthly highs, let's call it that. And then we had just basically dumping in Cardinal Health in the month of December. So next one, NBEV. Man, this thing has found basically no bottom. So you know the story of the marijuana names. This thing here is not has not found a bottom yet. So NBEV continues to trend to the downside. PSX. So Phillips 66, rough couple of months since November. Nice momentum to the downside move here to start the year, down 3.3%. ATI steelmaker, Allegheny, and this one here. I want to delete these are really old lines here. I'll delete some of those. And we're looking at a very the momentum picking up to the downside on Allegheny. And final one, Boeing. Boeing had a bit of a pop here, so even though this one here is showing as one of my dogs, we did get a few green bars here at the end to end the week. But Boeing, taking a step back, is still trading inside this browning formation. So the bias is lower. Okay, bias is lower, potentially going after that pivot there. But it's very tight, choppy stuff here. You can just see by the monthly chart how tight that is. As you zoom out farther, you can just see it's outside up, inside down, inside inside. So very, very tight action there. Not a place you want to be actively trading, because it's probably going to be easier stuff than Boeing out there. Now let's go back to our daily chart and let's talk about a few stars here. Solar names have still been rocking. CSIQ had been on a good roll since November, right? CSIQ, brought that one up before. WDC, okay, Western Digital, nice run, picking up strength there. WDC, OKE, okay, look at that run since November, nice run. Okay, Brazil, since for the past month, on fire. Look at the oil prices rocking. EWZ, the ETF, been rocking, right? So since the month of December, ripping. And last one, WTI, oil name. Good oil exposure. Same thing here since the month of December. Pow to the upside. All right. So that's a wrap for this week's video. Gave you lots to think about. Gave you some levels to think about for the coming week. Again, if you enjoy these videos, please give us a big thumbs up. Feel free to also subscribe to the videos if you want to get notifications on when these things drop, usually on Saturday evening. And if you have any questions, feel free to leave them on the blog site or in the YouTube comment section. Want to wish you a great second trading week of January. Make it a good one. Happy trading.